Joining me to discuss is longtime Berkshire shareholder Bill Stone. He's CIO of the Glenview Trust Company. Bill, do you take it as a bearish sign, or look, Warren Buffett talks about it. He says it could take us a year to build a position in companies sometimes. There's just not, they can't be that nimble.
Yeah, I don't know this necessarily bearish. I think it is, to your point, when you read off that quote, it's, clearly not enough looks compelling to him at this very moment. I think he went to pains to say, hey, we still have billions upon billions invested in both publicly traded stocks and operating companies. So it isn't, I think in his own way said, it's not that I'm negative on things. And in fact, I prefer to essentially over time, not have cash and invest. It's just looking for things. I'd also say, when he says nothing compelling, you also have to remember Buffett only really thinks in terms of his circle of competence. He didn't talk about this in the letter, but he's talked about it many times in the past. So there's just a lot of things he just automatically says no to because he says, it's not in my circle of competence. I don't invest in those things. Right. So that is also part of the math you have to think about. And
I was chuckling too when he said, obviously we also own outright a ton of companies. And he said, I regret more than a few of them, but overall they're doing pretty good. Their operating income was up strongly. He talked a lot about the changes that have been made under Geico and so forth. And I thought his comment about dividends was interesting. He made the point in passing that Berkshire's payment for corporate taxes represented 5% of all corporate taxes that were paid last year. And he said, we could do that because we don't pay dividends. And he really sort of talked about the value of that model. And I don't know if that would ever apply more broadly because they're such a unique holding company.
I think it's tough for many companies or, much of any company other than Berkshire to get this much room from shareholders to say, yes, you can hold on to my, $334 billion and not give it back to me or, because I trust you to find something to invest it in that I think is going to be good. You're right. Not many people or companies would get that trust. That's just the fact of the matter.
Yeah. So we mentioned a mystery chart, and let's find my buddy over here who guessed it. I think it was Brian. The mystery chart is Constellation Brands, which was a kind of a strange name when you always see Berkshire buying it, but not that strange. I mean, this is a stock with a lot of guts, a lot of bad news, you could rattle off 8 problems with it, a lot of warts, I guess you'd call it, and that's usually the kind of names that they're looking to. Why do you think this is such a good pick right now?
Well, it's super interesting because I think, again, you think about the model. It's not clear it's Buffett buying it, but obviously even Ted and Todd, who work with him, clearly think fairly similarly. So one is, he's looking for, maybe a brand name that has run on to tougher times that he can buy at a cheaper price. So think of Constellation. Really what you have to think of there is they own Corona and Modelo here in the United States. Run into some tough numbers here lately in terms of the outlook there. And really beer in general has been struggling, although those two brands have significantly outperformed beer in general. So if they get back on their kind of longer term trend, the stock is really cheap. Valuations are down at levels, frankly, we haven't seen since the company acquired Modelo and Corona, other than, on a few measures, maybe during COVID. But honestly, it's about as cheap as it gets, 13 times earnings, 2.3% dividend yield. I'd say the other part, Buffett loves companies that produce a lot of free cash flow. This company produces a lot of free cash flow. So it does fit the mold.